A Home Equity Loan Guide. Chapter 1. Home Equity Type Loans 1. Home Equity Loans/Second Mortgage. A home equity loan is a loan you take out using the equity in your home as collateral. A lender gives you money, up to about 75% of the equity you have in your home. People usually get equity loans to either fix up their homes, send a dependent to college, or if they have several bills, they will get one consolidation loan, pay off the smaller ones, and then they will just have the bill for the equity loan. Interest rates on home equity loans are usually the lowest a person who owns a home can find anywhere. The interest you pay on the loan is usually tax deductible. There are two ways to take a home equity loan. A fixed home equity loan is for a lump sum at a fixed rate of interest up to about 75% of the equity you have in your house. 2. Home equity line of credit, discussed later. Pay it off slowly with a lot of interest, just like you pay off a first mortgage. Financing companies offer their loans to homeowners with less than stellar credit histories at a higher interest rates than the banks charge because it doesn't matter. They have the collateral and the value of the home. Overall, home equity loans have origination fees, but they're generally cheaper than personal loans without collateral. The danger is that if you default, you will lose your house regardless of how low the loan is in relation to its value. Shop around at the banks, savings and loans associations, and most of the large brokerage houses. With a line of credit loan, they give you a limit, you take out what you need and only pay interest on what you use. The Truth in Lending Act for a home equity loan. The Truth in Lending Act gives you a chance to change your mind when you use your home as security for a credit transaction. When you go for a home equity loan and use your home as security, you have 3 business days, usually after you sign a contract, to think about the transaction and to cancel it if you wish. The creditor must give you written notice of your right to cancel, and, if you decide to cancel, you must notify the creditor in writing within the 3-day period. The creditor must then return all fees paid and cancel the security interest in your home. No contractor may start work on your home, and no lender may pay you or the contractor until the 3 days are up. If you must have the credit immediately to meet a financial emergency, you may give up your right to cancel by providing a written explanation of the circumstances. The right to cancel, or right of rescission, was provided to protect you against hasty decisions or decisions made under pressure that might put your home at risk if you are unable to repay the loan. The law does not apply to a mortgage to finance the purchase of your home. For that, you commit yourself as soon as you sign the mortgage contract, and, if you use your home to secure an open-end credit line, a home equity line, for instance, you have the right to cancel when you open the account or when your security interest or credit limit is increased. Home equity line of credit/HELOC. A regular home equity loan is a fixed amount of money at a fixed interest rate. An equity line of credit is where the lender offers you a certain limit or amount of money for you to use whenever you feel like it, when needed. You simply write a check. The interest charges vary with the current rates when you actually use the money. As a homeowner pays off the loan, his credit line goes up again the same way a credit card operates with its limit. Some financial institutions charge an annual maintenance fee for the line of credit, but most are satisfied collecting just the interest. The good part of it is that the interest you pay on a HELOC is tax deductible. Refinance your first mortgage info. Rather than get a home equity loan or a second mortgage, you simply refinance your first mortgage and ask for more money than what you still owe on the house, which is the money you would have got with a home equity loan. If interest rates have gone down significantly since you got your mortgage, it's a good idea to refinance anyway to get the lower interest rate. The bad part about refinancing is the fees and closing costs of the new loan. superpages.com/supertips/home-refinancing.html. A mortgage for more than the house is worth. If you've got good credit and you want extra money to fix up the house you're buying or buy furniture and stuff, the lender might be willing to give you a mortgage for up to 20% more than the house is worth. Chapter 2. Home Equity Type Loans 2. Home Equity Loan Scams. Many scam artists use equity loans to steal people's houses, purposely offering to upgrade, meaning offering additional money over and above the original amount of the equity loan as the months go by because they want the borrower to default. Then they just go to the fine print clause in the loan agreement which gives them CO ownership of the house. What they will then do is go over and talk to the sucker, offering them a few $1,000 to clear out. It happens all the time. If ever in conflict with a lender, demand all documentation and truth when answering your questions. You have that right under the Truth in Lending Act. Possibly secretly record the conversation while you speak to him. Hard money mortgage loans. Hard money mortgage loans are loans for people who have real estate they can use as collateral to get a loan that is probably at a higher interest rate than a conventional loan. These loans are virtually totally collateral based. They don't care about your credit rating much or your job as long as you have real estate collateral. The loans are often short-term. real-estate-club/il.html. realestatepromo.com. Home improvement loan programs. There are some government programs to help homeowners living in disadvantaged neighborhoods or homeowners who don't earn a lot of money, and some government programs open to any homeowner. These home improvement loans or rehabilitation loans originate from the following three agencies: HUD.gov, Fannie Mae. Public information. 3900 Wisconsin Avenue, NW, Washington, D.C. 20016. 800-688 Home. 800-732-6643. FannieMae.com. FannieMSCFoundation.org. Homestyle Second Mortgage Loan. Freddie Mac. 1776 G St. N.W. Washington, D.C. 20013. 800-466-1155. FreddieMac.com. Energy efficiency loans. The government or the local utility company in your area might have a program in place where they offer you a low-interest or no-interest loan to improve the insulation in your home, buy new windows and doors, get solar panels, etc. If your income falls below a certain level, the loan is interest-free. If your income is above that level, the interest rate is 5%. HUD.gov. Fannie Mae. Public information. 3900 Wisconsin Avenue, NW, Washington, D.C. 20016. 800-688 Home. 800-732-6643. FannieMae.com. FannieMSCFoundation.org. Homestyle Second Mortgage Loan. Freddie Mac. 1776 G St. N.W. Washington, D.C. 20013. 800-466-1155. FreddieMac.com. Home equity loan websites. FederalReserve.gov/pub/HomeAlign. NHEMA.org, Home Equity Mortgage Association. 1stadvance.org/mortgages/home-equity-lines.html. abcloanguide.com/2ndmortgageloansa home equity loans.shtml. advantagecash.com. advantagemortgagegroup.net. americanloansearch.com.